Welcome to Market Brief After Hours. It has been a truly wild start to the week in the global markets. We are looking at a landscape defined by a sharp divergence. On one hand, we have escalating geopolitical tensions, a naval blockade in the Strait of Hormuz, and oil prices threatening to break past that critical $100 mark. On the other hand, U.S. equities are staging a massive, almost defiant tech-driven rebound. Let's start right there. How did the major U.S. indices manage to shake off these war-induced losses today?
It is a fascinating psychological pivot by investors. Over the weekend, peace talks broke down and a U.S. naval blockade of Iranian ports was implemented. Normally, that is a recipe for a massive sell-off. We actually did see early session declines across the board, but the narrative quickly shifted. Investors essentially rotated right back into risk assets, betting heavily on a diplomatic breakthrough between Washington and Tehran.
And the numbers reflect a pretty staggering recovery. Let's break down those major U.S. indices.
Absolutely. The S&P 500 completely erased its recent war-induced losses. It closed up by just 1.02%, gaining 70 points to finish at 6,886. That is its highest finish since this conflict began. The Dow Jones Industrial Average had a similar roller coaster day. It was staring at an intraday deficit of over 400 points, but it clawed all the way back to add 302 points, or 0.63%, settling at 48,218.
That is a massive intraday swing for the Dow. And I imagine the Nasdaq led the charge, given the rotation into tech.
Spot on. The Nasdaq Composite was the star of the session. It jumped 1.23%, adding 282 points to close at 23,184. Software and technology names were the heavy lifters today. Investors seemed to look past the geopolitical headlines and focused instead on solid corporate earnings and the enduring promise of artificial intelligence.
It is a very different story across the Atlantic, though. European markets did not share that same optimism. The energy supply concerns seem to be weighing heavily over there.
The contrast is stark. Europe is geographically and economically much more vulnerable to energy shocks from the Middle East. The Pan-European Stocks 600 ended the session 0.2% lower, and we saw declines across all major European bourses. In the UK, the FTSE 100 fell 0.22% to 10,577. France's CAC 40 lost 0.4% to 8,229. Italy's FTSE MIB slipped 0.17% to 47,527. And in Germany, the DAX 40 closed about 0.3% lower at 23,750. Even Switzerland's SMI fell 0.28% to 13,146.
I imagine the travel and leisure sectors took the brunt of that, given the rising cost of jet fuel.
Exactly. When oil prices spike, airlines are the first to feel the pain. Wizz Air dropped 5.4%, EasyJet fell 2.6%, Lufthansa was down 2.3%, and TUI lost 1.7%. The cost pressures are immediate. We are already seeing governments step in. Germany just announced 1.6 billion euros in fuel price relief. Meanwhile, in Portugal, inflation held at 2.7%, but their energy prices surged by 5.7%. It shows just how quickly this conflict is feeding into European inflation.
And the energy markets themselves are reacting violently. The naval blockade in the Strait of Hormuz is officially underway. What is the situation with crude?
It is incredibly tense. West Texas Intermediate rose 2.6% to $99.08 per barrel. International Brent crude saw an even larger jump, climbing 4.37% to settle at $99.36. The target of this blockade is Iranian ports, and the market is pricing in severe global supply disruptions. Analysts are tracking tanker movements very closely right now because there are reportedly 21 million barrels of Iranian oil just sitting in the Gulf of Oman. If that supply is entirely cut off, breaking the $100 barrier is almost a certainty.
We are going to take a quick break, but when we come back, we will dive into the currency markets, look at some crucial technical moving averages, and break down today's biggest market movers. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the stark contrast between U.S. and European equities. Let's pivot to the foreign exchange and commodities markets. The currency pairs had a very active session today. Let's start with the euro.
The euro actually showed a lot of resilience as risk appetite returned to the broader market. Euro USD closed at 1.1761, which is a 0.31% gain. Technically speaking, this is a very interesting chart right now. The price broke above three major indicators: the 50-day, 100-day, and 200-day simple moving averages. That indicates a real shift in momentum toward the upside. Right now, immediate resistance is sitting at the 1.1800 level. If it can sustain a move above that, we could see a continuation of this bullish trend. On the downside, support is found at the 50-day SMA, which is at 1.1674.
What about the British pound? Did it follow a similar trajectory against the dollar?
It did, and with even stronger buying interest. GBP USD advanced 0.34% to close at 1.3506. It rallied from a daily low of 1.3381, which shows robust intraday demand. Similar to the euro, the sterling surged above its 50-day, 100-day, and 200-day moving averages. This signals a potential end to its recent consolidation phase. Immediate resistance is pegged at 1.3550, and support has moved up to 1.3431. If the pound breaks above 1.3550, the next target is the 1.3600 handle.
And looking at the commodity currencies, the Australian dollar seems to be riding the wave of these elevated energy and material prices.
That is the primary driver. The Aussie dollar extended its rally toward March highs, gaining 0.61% to finish at 0.7098. There is a strong bullish conviction here. Technically, AUD/USD is trading well above its major moving averages. The 50-day SMA is at 0.7029, providing a very solid floor for this advance. Resistance is at the recent high of 0.7150. A successful test there opens the door to 0.7200. But if it closes below 0.7000, we might be looking at a trend reversal.
Let's look at the safe havens. With equities rallying, I assume gold and silver faced some headwinds today.
They did, but it was more of a consolidation than a sell-off. Investors are really balancing their safe haven demand against this returning appetite for risk. Gold edged slightly lower by 0.10%, finishing at $4,742 per ounce. From a technical perspective, gold is still positioned above its 100-day and 200-day moving averages, but it is currently sitting below the 50-day SMA, which is up at $4,898. Support is firmly established at $4,669. It really needs a move back above $4,800 to reestablish a bullish bias.
And silver?
Silver had a wild intraday recovery. It dropped to a low of $72.62, but buyers stepped in late, pushing it to finish at $75.52, down just 0.41% for the day. That late push formed a bullish candle on the chart. Right now, silver is testing resistance right at its 100-day moving average of $76.09. The long-term 200-day SMA continues to trend upwards, which is a good sign for bulls. If it can decisively close above that 100-day SMA, we could see a test of $79.09.
Let's move over to the individual stocks that made headlines today. We saw some massive double-digit swings in the market. Who are the big winners?
The biggest story in tech today was Oracle. Shares jumped 12%. They showcased a new AI-driven utilities platform that is projecting massive savings for customers in 2025. It is further proof that any credible AI monetization strategy is going to be heavily rewarded by this market. We also saw SanDisk climb 11% on the news that it will replace Atlassian in the Nasdaq 100 stock index later this month. Index inclusion always drives institutional buying.
And the biotech sector had an incredible day as well, correct?
Absolutely explosive moves in biotech. Revolution Medicines rocketed 40% higher. They released positive late-stage trial results for a pancreatic cancer treatment that showed significantly improved patient survival rates. And Allogene Therapeutics gains 13% after reporting their Phase 2 data. Their CAR-T treatment showed enhanced efficacy in eradicating cancer cells in lymphoma patients. When biotech companies deliver on late-stage data, the market reaction is always swift and aggressive.
It wasn't all green screens, Dub. Who were the market laggards today?
Fastenal led the losers in the S&P 500, sliding 6%. They reported first-quarter operating income that fell short of analyst expectations, which is heavily punished in this macro environment. Best Buy also had a tough session, dropping 2%. They suffered a double downgrade from Goldman Sachs, moving from buy to sell, with a newly lowered price target of $59.
Before we wrap up, there were a couple of other major economic data points today. The U.S. housing market continues to struggle, while the crypto space is seeing some interesting corporate moves.
The housing data is definitely a weak spot in the U.S. economy right now. Existing home sales dropped 3.6% in March to an annualized rate of 3.98 million units. That is the weakest reading we have seen since June of last year, missing consensus forecasts. Inventory is still incredibly tight, and mortgage rates are climbing again. The average 30-year fixed rate rose to 6.37% last week. That is up from 5.98% just before this geopolitical conflict started, putting immense pressure on affordability.
And on the crypto front, Bitcoin recovered its weekend losses.
Yes, Bitcoin bounced back to around $73,400 by the U.S. close, up more than 3% over 24 hours. But the real story is corporate adoption. Bitmine Immersion Technologies announced they purchased over 71,000 Ether tokens over the past week. That brings their total holdings to about 4.87 million tokens, which is roughly 4.04% of the entire global Ether supply. They are actively targeting up to 5% ownership of the global supply, which is a massive institutional vote of confidence in the asset.
It certainly is a market pulling in many different directions. Geopolitical risks are high, yet tech and crypto continue to find buyers. We will be watching the Strait of Hormuz and the inflation data very closely as the week progresses. If you find this useful, please follow Market Brief after hours.